Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report where I will tell you what's going on the market from both technical and fundamental point of view. The last session, Monday and Tuesday, we really had a lot of news from the fundamental point of view. We got a lot of information, a lot of data. Market events, but now Wednesday is rather quiet. We can see take profit action on a few instruments. The volatility is rather low. The calendar is empty, so there's not much going on from the fundamental point of view as it was on Monday and Tuesday. On euro dollar, on euro, on pairs with euro, we are waiting for ECB, which will be on Thursday, so I wouldn't expect any fireworks today on pairs connecting with euro. Let me show you the calendar first. As you can see today, just data from the housing market. And data important for oil traders. If you're an oil trader, if you trade on oil, you are probably waiting for the data from the Department of Energy. And I guess that many traders are waiting for that because oil decreased volatility recently, and we can see that we're having a small short-term sideways trend. I guess that they're waiting for a trigger. The situation is both bullish and bearish in the same time, so to be honest with you, it can easily go both ways. We will see what will happen. We will see how it will go. Because potentially we do have, we can get nice movements on oil soon. Maybe even today, maybe even in 2.5 hours after this data will be published. What else happened from the technical point, from the fundamental point of view? We got ECB member Villeroy, most probably he's French. And French surname. You always read that in a strange way. He said that Eurozone economic situation is improving, and ECB has defeated the risk of deflation. Positive information for euro. Yesterday we also got an API data which showed us that the number went higher. Let me just tell you what was the exact number. I just need a second, please. Yes, API reported an unexpected rise in inventories on Tuesday. I won't tell you the number right now, or maybe it will be here. Yes, it showed 1.6 million built-in inventories. And also, well, last but not least, important news is that we got new all-time highs on stocks, but I think you got used to that. So the world index, MSCI world index, just made new all-time highs. Obviously, great support from the American indexes. Not so much of a support from DAX, as we do have a small problems on DAX, which I will tell you I will tell you about that in a bit. So that's the one here. As you can see, tomorrow press conference, rate decision press conference. Here also important, the same decision from Bank of Japan. So also I shouldn't I would not expect any significant movements on Japanese yen today. Okay, now charts. We can start from S&P 500. Why not? What we're having here is all-time highs, very close to all-time highs. Few local supports, this one, and 2405. As long as we stay above the gray one, I guess as long as we stay above the gray one, the sentiment is definitely positive, and we should see just upswing. Actually, from the curiosity, I need to change I need to check those corrections if they were the same. That's how it looks like. No, this one was smaller. This one was bigger, so not definitely this one. But let me check here. No, we didn't get correction quality pattern, so there is no point looking for it. When it will emerge, it will emerge. But the thing is that there is a full buy mode on S&P 500, and everybody here is happy. Traders have huge bonuses. Everybody's buying, and it's all good. As we can see, if you believe in the charts, it shows us that it's all good. And no DAX, well, not everything is so great. Let me delete that, because with this color you don't see much. But now you see it clearly. What do we have here? Left shoulder, head, and a right shoulder, and the price making lower highs and lower lows. Yes, you can name it a wedge as well. You can name it as you want, but you can see this would be more appropriate. And okay, this color can be all right. So we have both signals here, bullish and bearish. I think that bearish are look better. What are the bullish? The bullish one is the fact that we are still above the horizontal support here. This horizontal support is 12,350, let's say 50 points. So it's absolutely crucial in the midterm for the buyers to hold above the support. Also, what do we have here is a wedge. A wedge is a trend continuation pattern, those red lines, so it suggests us that the trend should be continued. And the trend is, well, we broke the trend line, but the trend is still bullish, right? At least as long as we stay above yellow support. So these are optimistic signs, these are positive signs. And what are the negative? The negative is the fact that we broke the uptrend line present here from February, so significant. And also the head and shoulder pattern. Obviously it's not active because head and shoulder pattern becomes active once you have a breakout of the neckline. The neckline here is in the same time the lower line of the wedge. And this is the base scenario here for me, as a breakout of this horizontal support and test of a neckline. I don't say that this neckline will be broken for sure, but what I'm thinking is that neckline, that this horizontal support will be broken and the neckline will be tested. Okay, obviously my bearish scenario will be crushed once the price will break the upper red line. So here I wait. If I will have a breakout of the horizontal support of the yellow area, that's a good occasion to sell. If you will have a breakout of the upper line, connecting head and top of the right shoulder, if you will have a breakout here, that will be an invitation to open long position. And now WTI. As you can see, nice upswing. But this week we have a sideways trend because we stopped below important resistance. In price action, this kind of setups that's a very good sell opportunity. Why is that? Because we do have a downtrend. The price tests 50% retracement of this downtrend and then tests that twice. And for the second time, when you do have a reversal pattern there, that's a very strong price action sell signal. But the thing is here that we do not have a reversal on this line. That's not a reversal, that's a sideways trend. That's traders waiting there for this situation to develop. That's not a reversal. If we will get an hourly chart, I would say that breaking that line, should it be a reversal? Well, not so much, to be honest with you. Maybe here. Breaking this support will be a sign of a reversal for me. But at the same time, okay, somebody could go there and say, okay, I'm not waiting for a reversal pattern. I will trust 50% Fibonacci retracement of the downtrend. But at the same time, what you can see here is an inverse head and shoulder formation. Left shoulder, head, and the right shoulder. So the 50% Fibo, which seems like a strong resistance, is at the same time a neckline. And if this neckline will be broken, that will trigger a buy signal and a low red line. If we will break the neckline here, that will open a way to test the local resistance here, slightly below $49 per barrel. That is situation on oil. Most probably they are waiting for this data from Department of Energy today, and that data, if it will be much better than or much worse than predictions, this data can cause a spark, can be a trigger here for a movement. Okay, that was WTI, that was DAX, that was S&P 500. So now let's come back to the Forex market. New instrument in our analysis, American dollar to Chinese yuan. We didn't analyze that instrument for it's the first time. As you can see, from the beginning of January, what we do have here is a correction. It's a correction if you look long term, right? But if you look mid-term, we do have a downtrend here from the beginning of the year. Channel down formation, the price making lower highs and lower lows. And that changes it, right? Because if you're a short-term, mid-term trader, you are in a downtrend and you should only sell. If you're a buyer, if you're a long-term trader, there's still an uptrend for you, so you should buy. I'll try to explain you this situation in detail. So here we do have few bullish signals, few bearish. First one, let me tell you about bullish or bearish. First bearish. So we do have this channel down formation, right? And we are below the uptrend line which is present on the chart since October 2015. So that's a very important trend line, especially that it got broken and then the very technical retracement here, and this formation got proven here. This bearish sentiment got a boost here because they bounced from the resistance, which was the recent support. That's enough for the bearish sign, for the bears. Now bullish signs are this, that although it can be considered a channel up formation, in the long term it's just a flag. It is just a flag, and also very flat flag because it lasts for some time, and it only retraced 23.6 Fibonacci as we speak. And you should consider a movement, a correction, till it is at least to 50% Fibonacci. So even at least here. In my opinion, another bullish sign is that we are above this horizontal support here. It was a resistance in January 2016, July 2016, June 2017, and there is a high chance that it will be tested here. Maybe not now, but here. So to wrap that up, in my opinion, what can we get in the short-term situation or mid-term is a decline. Decline naming this horizontal support, which I'm highlighting here with the cursor. But from that point, I think there are bigger chances for the buyers. There's a bigger chance for a reversal on this instrument than a breakout. That is my view on American dollar to yuan. Now other instruments. Cable after this weak data is trying to stop the disease as early as possible. They are doing quite good. Obviously, weaker dollar is helping them. Currently, the important resistance, in my opinion, is violated. I don't like it. I like when the price bounces or breaks the support or resistance. But here, the price just do not respect that. So I guess we can remove that Fibonacci's. Well, sentiment is still positive. Sentiment is still positive, definitely, as long as we stay above the maybe green. As long as we stay above the green line, the sentiment is positive. American dollar to Swiss franc, beautifully. That's what was expected from this instrument. Downswing, correction, downswing, correction, downswing, correction, downswing. So this long-term support is broken. Definitely. Next one is here. And with this beautiful short-term price action here, you see broken support becomes a resistance here. Come back resistance, and now the price is aiming lower. I think that's a great occasion for short-term traders. If you're looking for 40 pips trade, this one looks delicious. Australian dollar to American dollar has no mercy for the sellers, still pushing higher. We are getting closer and closer to the resistance from the May 2015. American dollar to Mexican peso. What a downfall, what a waterfall. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trading days, and only we had 2 bullish candles. That's pretty significant. So the aim, which I said here, is getting more and more real. An important one. As you can see, it is an important one. You can see that American dollar and Mexican peso are having one directional, well, they are having directional movements since 2014. Just an upswing and a downswing. which followed. Euro dollar is having a modest correction here, nothing special, just simple take profit action after new mid-term, long-term tops, and the closest support is the blue area. Maybe I will change the color, let's name it the gray area. Why do I change the color? Because I want to show you the reaction here. Here, reaction here, reaction here. So this support can be considered as an important one. I can see where's that coming from. I wouldn't be surprised if we got kind of this movement, then a bounce here, and an upswing. That would be good actually from the technical point of view. And gold, that's an interesting one, because here we are telling that the first aim for this is 38 point of Fibonacci level, and highs created by those lows from here. And the price actually went there, but I thought that they will try to bounce from it. But no, they decided, well, they tried to bounce from it, but now they are trying to break it again. So there is a bit of optimism here on gold. I was a big fan of gold. I'm not a big fan of gold right here, right now. I'm just worried that this demand for gold is artificial one, just caused by this weaker American dollar. So there is no really an increased appetite for gold, but the price is just pushing higher because the American dollar is weaker, and I wouldn't like to enter in such conditions. Euro to British pound. On euro to British pound, we had nice patterns. Now we don't have it anymore. I don't see anything interesting, and I will show you from the practical point of view what you should do when you don't see anything. You should just remove that tab from your platform. There's no reason for you to open this chart again and try to look for something, try to get a position. No, remember, it's not. That's not being a trader. That's not trading. If you have to force yourself to look for setups, no. What a real trader do is scan the market, and then when an occasion pops up, you just enter the market. But for that you need to see a market reaction, and it opens you the possibility to trade. Silver is also pushing high after this false breakout V-shaped retracement. It looks good, but again, this can be driven only by weaker dollar, not by increased demand on gold or silver. American dollar to Polish zloty. Here you can see also willingness for a small correction, but that just really tiny. Still, situation is very bearish. As long as we stay below the upper blue line, not even this horizontal resistance, but as long as we stay the upper blue one, sentiment is negative. Once the upper blue line will be broken, that would be a very good buy signal. American dollar to Japanese yen. Also, we wrote an analysis, I think on Monday. Let me show you Monday, somewhere here, where we said that there is nice opportunity for the price to get there, 70 pips lower, and that support looked good. Everything looked good here, so that's why we wrote that note to our traders which are following Alpari research and analysis. We wrote a note about this instrument that it's worth to look at. And the price declined sharply, bounced off this horizontal support, and now they also want to see what's gonna happen and decide what's the further action, especially that we do have a interest rate decision press conference from Bank of Japan, so I don't think there is a reason to trade it now. If you're gonna close it before the evening, fair enough, but if you want to keep it for some time, there is no reason for you to open a position here. Euro to Japanese yen, just a normal correction. Australian dollar to Japanese yen, invest head and shoulder formation, fighting for that. New Zealand to New Zealand dollar to Japanese yen, bounce to the neckline. Not a surprise as well after such a heavy upswing, strong upswing. There's an inverse head and shoulder formation, and they just couldn't force the neckline just like that. They need some time and space for that. I don't think it's gonna happen soon. British pound to Japanese yen, also a good one, but no trading signal here yet. And American dollar to Canadian dollar. This is a beautiful example of a trend continuation pattern, trend which started here. We got a wedge, breakout, wedge or a flag, breakout, flag, pennant, flag, wedge. Just trend continuation pattern, trend continues, trend continuation pattern, trend continues, trend continuation pattern. It goes on and on. And last but not least, Australian dollar, Canadian dollar. To be honest with you, I thought that the price will bounce from this trend line. But that is why you always have to wait for the price action for a confirmation, because sometimes, as I always say, markets can go the other way, and that's why you always need the stop loss order as well. Because you're not so smart, I'm not so smart, many traders from Wall Street are not so smart to predict the future. You do that by increasing the odds of something to happen, and that's it. Okay? Thanks very much, guys, for attending daily analytical report. As you can see, we got some nice trading occasions, and short-term, mid-term, long-term as well. I hope you enjoy that. And now we'll have a half an hour break, and after that, a webinar about MetaTrader 4, the best platform for trading.